Let's go to that big news today out of Martin Place in Sydney, the Reserve Bank Governor. This is Michelle Bullock's first meeting. And as we've already reported, Australia has lifted the official cash rate. 4.35 is the new rate. It's up from 4.1, 25 basis points. I think that's more than necessarily the market thought would happen. Joining me now for some analysis, Judo Bank's Chief Economic Advisor, Warren Hogan. Warren, thank you for your time. First hike since June, as I said, it's a big one. What was the rationale from the RBA today? What does this mean for households, given we're going into Christmas and retailers would be hoping at least some wallets would be open? I think it's going to be tough for people, isn't it?
Yeah, hi Peter, thanks for having me on the show. Look, today was absolutely necessary. They had no choice. I mean, the bottom line behind this rate hike, and if we get further ones, is that the RBA and the government, for that matter, have completely underestimated the resilience of this economy. The labour market's holding up, we're creating jobs, and you do not slow an economy down if you're creating jobs. So we've seen consumer belt tightening, and to your point, we're going to see some more on the back of this. But at the same time as those with mortgages and those who are doing it tough from higher interest rates, there's going to be a lot of households with savings, and we have unbelievably high levels of savings after the pandemic, who are going to benefit from this. It's a different economy to the one we know in the past. And essentially the RBA and the government have underestimated what it takes to slow it down and to get rid of this inflation.
So I heard a commentator on the ABC saying that this is nothing to do with the immigration spike. You know, the large volume of people, I think it was 500,000 in the last 12 months alone, coming into Australia. What would you say to that?
I'd say that that's, well, you can't be definitive, but logically to bring in 500,000 people, if not more, in a very short space of time, it adds demand into the economy. And of course, the RBA is trying to slow demand. So it's putting pressure into housing markets, which is directly affecting inflation through rents, but it's adding demand into retail, into all parts of the economy. So of course, it's putting pressure on the Reserve Bank. The extent of it, we just don't know. But of course, this economy is really in quite a strong shape, creating jobs, and that's just going to mean higher rates if they are serious about getting inflation down.
We've got another meeting before the end of the year, haven't we? Are we going to see another hike?
Look, I think they should. I think they should have gone 40 basis points today or 50 basis points. I mean, they're just going to be dragged kicking and screaming to this, and it'll make it worse for the community. But they didn't look like they want to hike next month. In the statement that the governor put out following the announcement, it was very softly. We've done a rate hike today. We've responded to the higher inflation numbers, the stronger economy, but no signal. They've said that they will if they have to, but that doesn't tell me that they're ready to go in December. But that's the problem. They're not getting ahead of this. They're not getting control of it. And and we know that our interest rates are well below what we're seeing overseas in other markets exactly like ours. And I think we're on dangerous territory that they remain behind the curve, and ultimately they have to raise rates by more than they would have had to if they were more proactive.
Well, I've got to go to an issue in Victoria because this was reported today. The massive suburban rail loop project is going to cost Victorian taxpayers around $200 billion. Not been modelled, but it's now been declared as exempt from the federal government's infrastructure review by the PM. I mean, how credible is that?
Yeah, look, from the start, from everyone who I know and respect in this space, this was a public policy failure from the get-go. And of course, it is a huge amount of money. So look, I can't speak to the merits of the actual project other than that anyone who I know knows about it thinks it's way too expensive and is not the right thing to do. The Treasurer is talking about cutting back on infrastructure spend to try and take some pressure off inflation over the next few years. This would be the perfect project to can and reassessed. But from what I can tell, this was public policy failure, no proper cost-benefit analysis done.
No, none at all, no modelling, and the fact that I want to look into it, I think Warren Hogan tells you everything. Thank you for your time.